Is going to be on free float and shares outstanding. Free float, shares outstanding. So, the way I'm going to describe this for you to go alongside the article that you've got to read is I'm going to divide this into three explanations. I'm going to tell you what free float is, how it's calculated, and why it's useful to know. Just bear in mind that this is to be watched in conjunction with the article. So, let's say that we have a company and we're going to represent that as a pie chart. The company is called Daily Trader TV Limited with the three-letter EPIC DTV. Just to keep it somewhat real. And the company, when it's launched, when it IPOs, there will be shares issued, so the company will be divided into a number of shares. And there are two types of people that we can say own this stock. There are what's known as restricted and non-restricted parties. And just to keep the numbers simple, I've split them into 50-50. So on this side, we're going to have non-restricted. And on this side, we're going to have restricted. And in this group of people, the restricted, let's say we've got an institutional investor. Maybe it's Blackstone. And they own 9%. And then the next person that owns it is the founder. So we've got a founder, this is all within restricted, who owns 11%. And let's say the next person that owns it is an individual, but he's a large long-term investor. So let's say that he owns 20%, and let's say that's Warren Buffett. So already we've allocated in the restricted bucket 40% of the entire number of shares outstanding. And then finally, 10% is owned by a hedge fund activist. And 10% is owned by employees. Maybe they have stock that is time restricted. So if we add these up, obviously I've made an error as I've gone along, so I will rub that out. This number should be 5% and 5%. So, in the restricted bucket, we have 50%, which is split amongst a number of what is known as restricted parties. So, what this means is that the restricted shares are effectively tied up. You can think of them as being in a safe, in a vault. And the public, who are in the non-restricted segment, they have access to 50% of the shares outstanding. They don't have access to this 50% for their own reasons. These people have effectively put their shares into a safe vault and they're locked up. So they're not available for supply to the market. So, the restricted is non-free float. By understanding how many shares are outstanding and what the non-free float is, we can find the free float. So we've answered the first two questions. What is free float? How is it calculated? Why do we need to know this? How is it of any use in our trading? Well, I would start off by saying that this is a very, very quick look at something that isn't that important. It isn't going to decide whether I buy a share or not, but it is something that I would want to look at. And anything that I suggest my students are aware of, I'm always going to give them an explanation as to what it is. So we're probably already 6-7 minutes in, and I'm explaining what all this is, but let's just understand in terms of importance, it's not that important. So let's look at, well, why do we need to know any of this? Well, the answer is that what moves markets is supply and demand. So if you imagine you're looking at a chart, what's actually going on is that there is demand for shares, and in order for people to transact, there has to be supply. And if supply and demand are in balance, then you're going to get this kind of effect. If it goes out of balance and too much supply comes into the market, then price is going to be forced down as supply overwhelms demand. If there's not much supply coming to market, And there's demand coming to market, then price will rise. And this is what we're trying to do as traders, is anticipate movement. So we're starting to learn about supply and demand and how to anticipate the expansion of supply and demand. One of the things that can help you is by understanding how much free float's in a company. If there's a lot of free float, that could impact the supply side of the equation. The law of supply and demand is far more important than any of the analysts' opinions, and certainly more important than anyone's opinions on Twitter. Supply and demand is graphically represented on a chart. So when I'm looking at a company's free float, if you could think back to the pie chart, I generally want to see a relatively small free float. I'm kind of looking for 50% to be locked up, 50% available, and for not to be millions and millions and millions of shares available in free float. So just pick an arbitrary number. I quite like to see 4 to 6 million in free float, which would mean there'd be 12 million approximately of shares outstanding. And most of the platforms that you use are going to be able to give you this information. But I can't stress enough, it's an in-depth description of a term that doesn't factor hugely in what I do.